Hi. So as we approach Easter 2024, the first quarter's been quite kind to markets. It's grounds for optimism. We asked Tom Becket, Chief Investment Officer at Canaccord Genuity Wealth Management, for his thoughts.
Well, thank you, Chris, and greetings to everyone watching here today. For those of you who are worried that there's some form of COVID flashback, I promise you it's not. I've just been out marketing to lots of our intermediaries and clients in the last few weeks, and this is the first opportunity I've stopped to pause and reflect on what's going on in the world back in the Home Office for once, which I can promise you provides some form of relief. Actually, it's the relief word which is probably the most relevant at this point in time. The end of last year, as we know, was a positive experience for investors after a couple of pretty troubling years, particularly in 2022. And the start of the year has also been positive for investors. And I think it's been a long overdue reminder of the importance of multi-asset portfolios and investing generally, and hopefully a demonstration after the experiences of 2022 and the first 10 months of 2023, when things didn't really move much in a positive direction, that ultimately the longer term, medium term outlook for investments is positive. Now, lots of you might say that runs somewhat contradictory to everything you might read in the newspaper or see on the news, both pursuits that are damaging to our health at this point in time. But whilst that's true and the world remains a tricky, challenging place, I think we also need to reflect that ultimately the only real guide to long-term investment success is buying attractive assets at sensible valuations and holding them for a long time. The turbulent 20s, the COVID experience, what we've seen since then, all of that might have called that into question, but reality is that will be the case for the long run going forwards. Investing has a purpose, and we would, even in the world of higher interest rates, just point out that ultimately the long run investment potential for and returns is quite positive. And part of that goes back to that point around the world being complicated, challenging, conflicting, lots of different C words, because ultimately that's what gets reflected into asset market valuations. And as we sit here today and think about portfolios, we're expecting to make money from both equities and bonds, a different experience of 2022, and the opposite experience in all honesty. And the reason is because the valuations of those various different investments is appropriate for the risk that we're taking. It's not sensational, but it's actually, we believe, in many cases, quite good value. So why has the start of the year been easier for investors than might have been the case? Well, this year should be a year when the economy remains just about positive, even if it slows down from last year, when inflation continues to disinflate, and when interest rate cuts are the likely next move in interest rate policy. All very different experiences to 2022, which is why we might see an inverse reaction, a positive one, in financial markets to what we saw back in 2022. And so the world should still be sufficient to generate corporate profits growth, which is good for equities. And with inflation and interest rates coming down, that should be good for fixed interest markets. So whilst we're certainly not out of the woods, and whilst there's lots of risks out there, we would just point out that the end of last year and the relief we saw for portfolios was appropriate. The start for the year has been calmer than some people expected, but is a reflection actually that the investment outlook's not bad. And finally, looking forwards, there'll be lots and lots of periods in the next few months, quarters and years when things look difficult for investors, but ultimately that long run philosophy of buying attractive assets at sensible valuations and holding them for a long time will stay true. And we believe there's lots of things out there to fill portfolios at this point in time. It's a very different experience to that which you might have been saying at the end of 2021, when there was lots of risks out there. Those risks were well known, but they weren't factored into valuations. Things are different now, and we believe that investors should reflect that. Thanks for your time, and back to you, Chris, and look forward to speaking to you again soon in the future. Thank you.
Well, thanks, Tom. Quite enlightening, I think. I hope you all found it useful. But if anybody has any queries, please do not hesitate to pick up the phone, send us an email to your normal CBW financial planning contact. In the meantime, I wish you all and your family a very happy Easter.